If you've tried buying a home as a business owner, you know it's near impossible to qualify for a mortgage, or at least it's really difficult. So if you're tired of jumping through the hoops to prove your income, or you've been told no for a home, then this video is for you. Now guys, in this video, I'm gonna tell you everything that you need to know about a special type of mortgage program called the bank statement loan. And I'm also gonna tell you whether or not this is a good option for you. We're also gonna review what are some of the pros and the cons, what's needed to qualify, how do lenders calculate your income through your bank statements, and what are some of the current interest rates that you should expect right now? And finally, and most importantly, how to get the best terms when shopping around for your bank statement mortgage. All right, so what exactly is the bank statement loan program? Now, this bank statement mortgage program is exactly what it sounds like. It is a loan for self-employed borrowers who need sort of like creative financing when it comes to proving income. Now, this is by using bank statements, whether they're personal or business bank statements, to show income instead of having to submit tax returns. Now, you see, the biggest issue with normal mortgages, such as FHA loans or conventional loans, is that self-employed borrowers have to submit tax returns in order to qualify. And this could either be a Schedule C or an S corporation or C corp taxes, and then on top of it, you have to send your personal taxes. Either ways, if you are self-employed and your business has a lot of expenses, it may hinder you from qualifying for a mortgage. Now, you might have a situation where maybe your business has gross receipts of $500,000, but you write off absolutely everything that you can think of because obviously a lot of write-offs will typically lessen your tax burden. Now, obviously that helps you with your taxes, but not so much when it comes to buying a house. Now, meanwhile, the bank statement program doesn't care about your taxes. It doesn't even care whether or not you have filed taxes. The lender will take a look at 12 or 24 months of bank statements, and they'll look at the business activity deposits. Now, that's really important for you to know because simply having money in the account is not enough to qualify. You can have $1, $2, $3 million in your bank account just sitting there, but if you have no business activity, then that won't be enough to qualify you. Unless maybe you sell a very high ticket item, maybe 5, 6, 7 times a year, and you can prove it, your business can prove it, then great. Obviously, that's good enough. But just having money sitting there is not enough to qualify for a bank statement loan because you have to show consistent deposits of your business in order for the lender to use those deposits as income. And obviously that's a key word right there, that they have to be business related deposits. So just because somebody pay you with Zelle or you got multiple people giving you Zelle money, that doesn't really mean income unless you're providing a service and people are paying you through Zelle, then that's really cool. But just getting a few deposits here and there, it's not going to be enough. So if you're an individual who is a business owner or you are a 1099 contractor who has strong cash flow but inconsistent tax returns, or like I said, maybe you haven't even filed your tax returns, then this could be a pretty great option for you to get a mortgage. All right, now let's talk a little bit about who is eligible for a bank statement loan. Now, the biggest requirement is that you have to be self-employed for at least 2 years. If you're an employee of a company and you receive a W-2, this loan is not for you. Now, on top of it, you can be a non-permanent resident. So obviously, FHA came out a few weeks ago, a couple of months ago, and said that they won't allow non-permanent residents to get mortgages. So with this loan, you can still do it. Obviously, resident, alien, or citizen will qualify. But you can even also have an ITIN number, otherwise known as a tax ID. And you can apply as well because there is a bank statement loan program for tax ID borrowers. Now, you can also be a first-time home buyer or a repeat buyer. It doesn't really matter. And you can get this loan to buy a house, refinance, or do a cash out refinance if you want to tap into the equity of your property. You can even use this loan to buy investment properties or second homes. All right, now what about the down payment and credit scores requirements? I'm going to show you right here a relationship between credit scores and down payments for this program. Now, these can vary from lender to lender, but typically what we found out there in the marketplace is that 640 is going to be typically your minimum credit score to qualify. But between 640 to 659, you're going to need at least a 25% down payment. Now, from 660 to 699, you'll have access to 20% down payments or 80% loan to value. And from 700 to 719, typically they'll ask you for at least a 15% down payment or 85% loan to value. And then finally, if you have a credit score over 720, then you will be able to do a minimum of 10% down payment or 90% loan to value, which will be for obviously primary homes. Now, one of the really good advantages of the bank statement loan is that even if you do a less than a 20% down payment, there is no mortgage insurance, so you're not gonna pay PMI. Damn. All right, now that you know what the program is for and who this is for, let's talk a little bit about the pros and the cons. One of the big pros is that it's an easier approval for self-employed borrowers. Obviously, no tax returns are needed, which is really the highlight of this program. Now, you'll also be able to qualify for more mortgage than having to go through a conventional loan where you have to show your tax returns, because typically people who are self-employed, they will have a lot of deposits into their bank statements from the business, which could obviously be way more than what they are saying on their net income based on the tax returns. So normally this program does allow you to qualify for a little bit more financing. Now, the third pro is that it is going to have competitive interest rates for those borrowers who have a strong financial profile. So obviously over here, you do want to have at least a 750 to an 850 credit score in order to get the best interest rates. And of course, you'll definitely want to put at least a 20% down payment, because that's going to give you the better rates. Obviously, if you're able to do more, such as 25% or even 30%, then this, along with the really good credit scores, is going to help you qualify for pretty much the best terms anywhere, any lender that offers a bank statement loan. Another huge benefit about this program is that it does not have PMI, so no mortgage insurance, regardless if you put less than a 20% down payment. So obviously that's going to help you save a little bit of money. And another huge pro about this program is that it requires a less waiting time for big derogatory events such as foreclosures, bankruptcies, short sales. Typically, this program requires at least 2 years out of any of these things, whereas a conventional mortgage might require at least 5 to 7 years out of a foreclosure. If you had something that happened to your credit that obviously is taking you out from qualifying for a typical mortgage, then this could be a really good option for you as well. Obviously, the program is not gonna be perfect. So let's talk a little bit about the cons of the bank statement mortgage program. Now, the biggest downside of this program is that it does require a bigger down payment than a typical mortgage. And obviously, as I already went through with you guys on this video, 10% down is going to be the very bare minimum if you have a good credit score. If you have a lower credit score, you're gonna need to put down at least 15, 20%, sometimes even more. Now, the second downside is that it is going to have higher interest rates compared to traditional mortgage programs, such as conventional loans, obviously. These programs are not bought by the government. These are not going to be Fannie Mae or Freddie Mac mortgages, or they're going to be backed by some sort of government agency. So that's the reason why these programs are going to be a little riskier for the lender, and therefore that risk is going to get passed on to you as in the form of higher interest rates. But it's not necessarily horrible. I found that, typically the rates on these programs are just roughly about 1 to 2 percentage points over what a normal conventional mortgage is. So if a conventional mortgage is sitting at 7% on a 30-year fixed loan, you should probably expect one of these bank statement programs with good credit scores and a good down payment at roughly maybe 7.5 to 8%. So it is a little higher, but it's not going to be horrible. Now, obviously, it goes without saying that if you don't have a good credit score, you're not going to get really great terms. So really, one of the downsides of this program is that you do want to have really good credit scores. Obviously, 640 is going to be your bare minimum. But if you want to get the best rates, you want to be at least at a 720, 740 even. Of course, if you're going to compare this to an FHA loan where, with an FHA mortgage, you can get that loan with a 580 credit score and you're going to get a decent interest rate. This program, if you don't have at least a 700 or 720, then the rate is going to be higher. So you definitely have to count that as a downside. And finally, this is really a big downside for especially first-time home buyers, is that this program is not going to give you access to any grants, There's not going to be any down payment assistance available. There's not going to be anything like that. No low down, nothing like that. If you are looking for a program that gives you access to grants, down payment assistance, or incentives because you are a first-time home buyer, you're not going to find it with this program, because once again, this is not geared towards first-time home buyers to begin with. Now, you could be a first-time home buyer by all means, but this is not geared to give you some sort of freebie because you are a first-time home buyer. If you want to look for something that will give you sort of a grant, or maybe you don't have enough money to buy a house, then you need to look into an FHA loan or a conventional loan. I would say that another downside is that this loan does require at least 6 months of reserves. And basically what reserves are is that the lender wants you to have at least 6 payments of your mortgage, total house payments, in the bank after you have already closed. So for instance, if your payment is $4,000 a month, then 6 times 4 is going to give you $24,000. So you have to have at least $24,000 on top of what's required to close, because that's going to be your reserves. So again, if you don't have the money to buy a home with this program, or you need some sort of assistance, then this loan is not going to be for you. I want to give you guys a real life example of a client that I had last year that I helped with a refinance through a bank statement loan. And these were his taxes for 2023. Obviously, I wrote off everything, his personal information and all that to keep his privacy. But what I want you to notice is right here, his business, or at least the Schedule C business, which was one of the businesses that he had, he grossed $32,000. And then after certain expenses, which really wasn't much, his net income came out to be about $27,000, which obviously is not going to help us qualify for anything. But then one of the things that I had him do in order for me to understand his business a little bit better was that I had him do a profit and loss statement for 2023. That way I could see how much money came into the business and also how much money went out. After I saw that he had a gross profit of about $195,000, I knew that we had a solution for him, which was through this bank statement mortgage program. Because even though he had a gross profit of $194,000 after expenses, which were about almost $80,000 for the year, he still netted roughly about $117,000 worth of income. With $117,000 for the year, that was going to be more than enough to get him to qualify. And obviously, this is not something that we actually used for his loan. It was just for me to understand his business better. But upon receiving his 12 months of business bank statements, I was able to analyze that his business actually made more money, and he would have even been able to qualify for a lot more, even though he didn't need to. But that's how this works. And so I want you guys to see that if you are in a similar situation as this person here, you can kind of tell that this bank statement loan can probably help you. Let's talk about what you should expect out there in the market as far as interest rates are concerned. Now, I'm making this video on June 2025, and interest rates are hovering anywhere between 6.5% as the lowest to as high as 8.99%. Now, obviously, like every other mortgage program out there, rates change on a daily basis, but sometimes it does take longer for lenders to adjust these rates on these mortgages. Now, if you are a borrower who doesn't need a 30-year fixed mortgage, this program does offer adjustable rate mortgages in the range of 5 years fixed, 7 years fixed, and 10-year fixed periods. Right now, 10-year ARMs don't really have a ton of advantage over a straight up 30-year fixed mortgage, but who knows, maybe in the future there will be a difference. And then also another cool thing about this loan is that it does not have any prepayment penalties. So if you are buying a primary home, you're not going to have to worry about having, to pay some sort of pre-penalty because you want to refinance in the future. So that's a cool thing about this loan for sure. All right, so now how much can you get financed with a bank statement loan? Now, most lenders that offer bank statement mortgage programs carry a minimum loan amount anywhere between $80,000 to $120,000, and it can go up really high. We have seen up to $6 million out there, and actually I saw a provider do a bank statement jumbo up to $10 million. So if you really need a big mortgage, this can be a really nice solution for you. Okay, so how do you apply for a bank statement loan? Look, my recommendation is to go through a mortgage broker to get the best terms and interest rates. Now, I might sound a little bit biased because I am a mortgage broker, but I do a ton of these deals for my clients, and they really benefit from the fact that I have access to the guidelines and the interest rates of 20 different providers that we have. Also, I specialize in working with self-employed people. So if you have a situation that maybe another mortgage broker, another mortgage lender was not able to see to help you out, this is something that I do a ton. And there are a lot of mortgage brokers who also specialize with self-employed and investors. So that's why I'm saying, like, you should work with somebody who can give you better guidance, because working with self-employed clients is not as straightforward as working with somebody who has a W-2. This is something a little bit more out of the box. And who knows, obviously there could be another solution that could be better for you. So that's one of the reasons why I say that working with a mortgage broker for these sort of special financing kind of deals is gonna be better off for you. But definitely do not walk into a name bank like a Wells Fargo or Chase or Truist or a credit union, because they do not offer any of these type of mortgages. So you're just gonna be really wasting your time. All right, guys, this is all for today. If you like the video, just make sure you give it a thumbs up. And if you have any questions about maybe your own situation, just put it down in the comment box below. But also, you will find my contact information in the description of this video. So if you wanna shoot me something, you wanna get an answer, personalized, feel free to reach out by all means. Even if I can't help you out personally, I love to just even give, normal guidance. I don't have to make anything out of it. So anyways, that's all for today. Thank you for watching. Have a good one. Take care. Bye.